Hello, everyone. With me today, I have David Baggett. He's the founder and managing partner of Opportune. David, we're really appreciative of you joining us today. This is a time really no one could have prepared for or even imagined. What are you hearing from the industry as businesses find themselves in survival mode?
Jessica, it certainly is survival mode out there right now. But the people in this business, to get in the business in the first place, you have to be an optimist. And you understand that there are cycles, and this is certainly a historic cycle. But it's a high-risk business based upon commodities. So the question, is, we're in a downturn. When does it come back out of it? While there's some, certainly some encouraging signs, no one really knows, and time's of the essence. So, I think most people are looking at a blow-down business model right now. That certainly capex is the headline, and it's certainly coming down, and you can see that in rig counts and company announcements. Big companies cutting capex by a third, and rig counts being a third of what they were a year ago. So focus is really on short-term survival and lowering costs and looking at how to just really survive in a very short-term scenario.
David, does that really kind of go into your advice, maybe that you're giving businesses for strategic plans and organizational design? Do they find themselves having to change?
I don't think anybody's in a denial anymore about where we are. Sometimes that's the first phase on a down cycle is denial. No one's there now. And so people are doing divestitures where they can. Obviously, there's not a great market for that, but I think an improving one, especially of PDPs. People are having to hedge short term to make sure that they can survive and meet their short-term business plans. And so no one really wants to hedge in this pricing environment, but it's a time to do that through different mechanisms in order to assure cash flow. And I think people are really looking at headcount. Do they need the headcount they have? I mean, if you look at it, if you're not drilling, aren't having as many workovers, you have to look at your overall cost structure. And does that really align with what your current business model is in this blowdown mode? So, I think that it's just really about short-term survival.
And with that, are you seeing more bankruptcies and consolidations coming? I guess that's maybe kind of an obvious question, but what do you see there?
In the short term, I'm seeing more bankruptcies than I am consolidations. We just finished this borrowing base of the first quarter, and the first part of the year, and you're already seeing and being announced in terms of various ways to push out whatever the problems might be with the borrowing bases, with the RBLs. And so we're seeing standstills, forbearances, but that often ends up being ultimately having to do the big R restructuring on those. We have some high yield issuances coming due in the tens of millions of dollars over the next 12 months. And so that's going to push people too. So I think that the lack of liquidity, the lack of public markets, there's going to be another rash, unfortunately, of people that are going to have to use the big R restructuring. In terms of consolidations, I have been amazed about how few of those there have been over the last 2 years. A lot of the ones we have seen, at least private companies that we've seen, have been among portfolio companies among the same PE firms. You can imagine there's social issues with that. You can imagine that between PE firms, different people have different ideas on valuation, and we really haven't seen a lot of that. And if now it's just too late for certain consolidations for certain companies, at least with the amount of debt loans that they have. So that opportunity maybe have been missed by a lot of companies.
And David, for the surviving companies, we hear a lot about the need for technology, automation. Of course, that conversation's been going on for a while, but efficiency, what can we do there? Do you see new ideas maybe merging from this unfortunate time with companies looking to find new technologies they can use?
There was certainly a push for automation of field capabilities over the last couple of years. And you've seen a lot of that. Actually on some big levels, and that did make things more efficient and cost effective. There's been other products like Salesforce that have helped companies get better dashboards or manage their business. But really what we're saying more than anything is reduction of those costs too. It's all about short-term ROI.
Mm-hmm.
And so people aren't really starting, it is a general rule, new capital projects around IT. Just not doing it. Maybe it makes sense in the long term, or it does make sense in the long term, but not in the short term. So for us, and we have a large process and technology group, we're actually seeing, projects, several projects that are pushed or potentially canceled altogether. So I don't think in the short term people are really focused so much on making their systems better.
What about your advice for the industry to push through the next 6 to 9 months? Of course, this will be felt for, we have no idea how long, but how do we recover in the near term?
Well, Jessica, it is about supply and demand.
Mm-hmm.
And that's the energy business has always been around that. And a couple million barrels a day can turn the pendulum. And so, but you're seeing that companies are already doing things, around lowering production, shutting in production. Some of the biggest shut-ins of productions I've ever seen, in the thousands of wells and over 1 million barrels a day, well over it. And of course, the headlines of, OPEC and 10 other countries getting together to significantly reduce production through, 2022.
Mm-hmm.
Capex is down. The rig count, as an example, is down to a third of what it was in the U.S. just a year ago. That trend will continue, and we've seen some positive signs out of that in terms of some recent lowering of storage levels, which have been at near all-time highs. So, look, it's about supply and demand. It's about hunkering down
Mm-hmm.
over the next 6 to 9 months, and waiting for better times.
David, let me ask you, as a veteran of the industry, do you have advice for colleagues in the industry, but not only advice, but what you see as the path forward as we move through this?
Well, Jessica, I've been in this business for, 38 years, and this has been a cycle I've never seen, and some dynamics that no one could predict. So there's not really a game plan,
Mm-hmm.
for exactly what's happening and how to go forward that's proven. But certainly, I believe we're going to see fewer companies. Doesn't need to be, hundreds of companies in some of these plays. So you're going to see fewer companies being backed by private equity, more consolidation, a continued focus, less on growth and more on free cash flows and cost rationalization, which I believe will lead to things like outsourcing becoming more popular. And really just a focus, to the extent there is capex, it's not going to be marginal capex. It'll be things with higher RRs and ROIs. So there's going to be a new normal. We don't know exactly with the pandemic what that is and when it's all going to get better, but it is a cycle and it will get better.
Right, hunkering down and figuring it all out. Thank you so much, David. We really appreciate your time and you sharing your expertise with us as well.
Thank you, Jessica.
For more Hard Energy videos, follow our social media channels.